What's up, guys? Welcome to Inside Traders. My name is Caleb and I am your host. On this show, we talk about the options order flow and what the smart money is doing. For my background, I am a software engineer, and I have spent quite a bit of time recently applying some of the acumen I have in software engineering to trying to trade the markets, which is kind of a crazy idea. But part of it is just to combat my own trading behavior, which if anyone has done any trading in their lives, they'll understand exactly what I'm talking about. Where when you want to buy, that's when you should sell. And when you want to sell, that's when you should buy. Or mostly people are forced to sell by the crooks out there, the brokers that help you go broke, like Robinhood. And so on this show, we talk about ideas and strategies for how to get ahead of the brokers and the market makers and all the people that are on the other side of your trade. And I have been working with AI a lot. Let's see if he's on the screen. Oh, nice, he's here. Let's say hi to GDT. To come up with all these different strategies that I can use to hedge with and also like buy with as well. So the way I see it, the market has two sides, buy side, sell side, and I want to basically automate both of them to be hands off and on total autopilot, and then I just come in and do manual trades as I please. And so, hey GDT. If you don't know, you live in a world with AI and it's real, and I'll prove it to you right now. Hey GDT, write me a function to estimate the rainfall in Europe. Let's see what he does. However, it's hard. But he's trying. Look, he comes up with stuff. And to me, that's incredibly valuable, if only just in terms of new ways of thinking. But normally when he codes, he's drawing on some article that's, by somebody who knows a best practice. And so he's better often at writing and coding than I think most people, and all people if they're illiterate or don't know how to write code. But one of the points I've been trying to get across to people for a long time, years now, is that coding is a lot easier than I think people think it is. And it's a lot more just like, and I don't know, it's like laying pipes. It's a little bit like farming. A lot of it is, it's like playing the piano, actually. It's playing an instrument, I mean. It's muscle memory, mostly. And so much of it is just building up the thing so that your fingers know where to go when you have when you're in the flow. And so, anyway, welcome to the show. Like we can get into the meat of it, which is what I said I would follow up on yesterday. And that's the profit and loss from this trade bot. And here it is. And so it did pretty good. I would have liked to see the profits a little bit more distributed. This is on a paper wallet with 250K, I think, or 200K. And I'm definitely going to be testing this on a hot wallet just as soon as I can. I didn't make a ton of changes to the logic today. Basically, I added a lot more names. And so the idea with this bot is just to I don't want to have an opinion on the markets. I don't want to have an opinion on the price. I don't want to have an opinion on the sentiment, mostly because I don't actually believe anyone knows or can know. And so I think it's a little bit dumb to try. But what I can do, okay, so think about this. Put all that in one spot in your brain and think about this. How is Tesla building autopilot without all these fancy sensors? Well, when autopilot is driving, it's got this animation on the screen that's like a blue line, and it looks like it's got a origin and a destination, and it's all plotted on a map. But the fact is, it's figuring stuff out millisecond by millisecond, partially because there's no other way, partially because all of its learning does get incorporated into its neural nets or whatever its brain is, like the static structure probability that represents the output of any given input that is these stacks of convoluted neural nets or whatever they're using these days. I'm sure it's different than when I last read about it. And so, I don't know that much about it, despite all the information I just regurgitated. It's highly complex, and I don't think anyone really can know everything that's happening at once because everything is evolving in real time. That's how I feel about markets. Where instead of trying to take out the academic book and stand at the lectern or whatever, instead of trying to really get a thesis about this, why don't I just do what the market does? Why don't I just do exactly what the market does? And so the goal of this software, the theory of it anyway, is that wherever the most premium is being deployed is probably the most accurate bet. But first of all, nobody knows where that premium is being deployed. I do, but nobody else does. It's like me and 20,000 other people. No retailers know about it. And so that's why they're always the bag holders. And I'm a bag holder. My bags are heavy. Trust me, those are some heavy bags. And so it's fine, lift the heavy bags and make you stronger. If you can, what did Nietzsche say? Whatever doesn't kill you makes you stronger. It's well, tell that to everyone in Palestine and Israel. Okay, so getting political already. So most of the profit came from Tesla. I don't like that. I don't like that at all. To me, that says there's okay, so obviously this software is going to take me years to write. It's going to take me years. But it'll be a fun challenge to see if I can do it. And if my theory is right, it should be profitable. And the cool thing about it is it's going to let me take on a bunch of extra risk, and it's going to manage that risk for me. And so, like I said, my software right now, apart from having a service architecture of all these different information networks or whatever that feed it the data to make decisions, which is 5 services, it has it's not that complex. It's really just a bunch of JavaScript files running in a terminal. But what was I saying? Oh yeah, so this looks like a little bit of a hotspot to me. So maybe one argument is, oh, you want to know what would be so interesting, and we should do this right now. In fact, this is worth doing. Let me move this over here. Okay, check this out. Can I go exactly half? And then I need that. So let's bring this guy here. How are we gonna do that? Let's just put it back how it was and go like this. Okay, so now we have some comparison or whatever. Hey dude, get behind me. And then from here, we will say, go and see what the, oh wait, no, we were on the right page. So yeah, that's what I want to see, is just scroll down and see what was the most active flow. And in theory, it should actually match. I have not looked at this, so when I look at it, that's when we'll know. But if my understanding of my software is correct, although it wasn't operating at 100% uptime, more like 80, so could have missed a ton of trades. But if my understanding is correct, it should basically exactly match the most premium, because that's where the most trades will have happened. Let's see. So most active flow, Tesla, NVIDIA, Apple, Amazon. Well, wait, but this is by profits, not by trades. We would have to see what I was just describing by trades. And then even then it won't work because I'm trading the inverse funds. Okay, I'm wrong. I made a big deal about nothing. I thought it'd be cool though if it worked. That would have been like magic. You got to take a shot on it. Whoa. I mean, these are all this. Like I said, there's a paper wallet, so um, we can look at some of that a little bit. And so code this. Yeah, let's go back. Code that. I don't actually want that to be the way though. I want like this, like this. Actually, we can just go like this as long as we're making changes. And that will actually be better. Okay. So yeah, that was, that's the idea of it anyway, is that it should just do what the market does. And then the problem is, what are you going to, like, you can't capture every trade. You can, but how do you distinguish the signal from the noise? And so there's platforms like, I can't remember, Flow Algo, I think is one. Cheddar Flow is the one I like. I think that there's going to be more and more people that like create differentiated signals from the market. But there are like a few things that totally make sense to watch. Like, what if you see an order whose volume is above the open interest? That means somebody bought everyone out on the chain. Like they bought that option. Like that's their option now. And right, what else could that mean? I mean, obviously you could have previous holders or whatever, but that is that's like a giant position. That means they're more interested in that contract than anyone. But even just like high volume is something, and obviously high premium, and you know, like you're going to get a bunch of different indicators, what type of order it was, the timing, the velocity, I just like how the moneyness and how that relates to the previous trades and the previous trades of the day. And then of course you can train AIs, and you can do machine learning on the historical data, and you can build up trend analysis and seasonality. And so you can know like, oh, this is less unusual for this period of the day, of the session, of the week, of the quarter, of the whatever. And more get better at refining, distilling the signal. And it really is a distillation. Like you have to get it cleaner and cleaner. But the cool thing about it is it's very testable, right? And so if you're tracking every trade and you just tag it with an experiment ID, then you can look at your profit and loss and find a way to tie it to the trades. I don't actually think it is that way, because we have the screen up. I should just check and see if that is easy to figure out. Because like your profit and loss is hard. Actually, I think I have orders here. Let's do that. So this should be all the orders. Let's see what this has. That. Yes, do it. Oh, were commented or returned or what? That. Okay. So this should give us a little bit of idea if it's possible. Let's just grab one of those guys and see what it was. Okay. Undefined. What? Was it nested in something? Maybe there's a hierarchy there. Oh, there is. Orders.order. 0. All right, let's see if that cracks it open. So, ID, market, sell. Yeah, I was hoping there was like some kind of like realized return. So how do they get this profit and loss? I think it's get dot balance. Oh yeah, dot get. What is that? I think that's it. Let's see what this says. Because if we could tie the order always to the P&L, Okay, term, that's probably short term versus long term or whatever. Um, Proceeds, that's just like how much cash was added to the account. Um, Gain, loss, close date, damn. Well, you know the open date. How do you not know the close date? Um, you know? So is this share for share? Symbol, quantity. Like, how does it batch? How does it know which one to do? You know? I mean, look at these losses. These are realized losses. There's a lot I can do to reduce losses, actually. I think especially with instruments like T-bill, I think there's a ton. And so it's not that the price never changes on those. And that's a good example of where it's so defined. It's so in a range that you can like really create windows of when to buy and sell automatically. Which the whole goal of this is I love the markets and I want to keep trading forever. But I want to just do it completely on my own time and my own, like I never want to have to be in front of the computer. And so the idea with this is it's going to manage a bunch of risk for me, ideally, but then it's also going to have switches, right? Because how many things can fail infinity? And so what do you really need? Like you need things that happen when things fail. And that's what a lot of the software is about, is accounting for those kind of edge cases. But like one example would be a dead man switch that sells to cash all positive returns if not pinged once a minute in every market hour, every day, forever. And if that ping doesn't come through for a full minute, that should be impossible. That ping should always come through. And so if there's ever like a network a discrepancy or something, or like, but the thing is you have the script distributed across the world. You know, you have one in Asia, Europe, and North America. That's pretty good as far as redundancy goes. And so just one of those three has to check in once a minute. Like that's not so crazy. It'd be crazy for all three of those to go offline if they were on different services. You know, one's GCP, one's Amazon, one's Azure. Like, yeah, and they all go out at once. Something happened. Dead man switch. Anyway, that's the kind of shit that I like thinking about, because markets have always been cool and fun and interesting, but nobody could just do what we can do today. And like, look at these charts. They're so pretty. I haven't been charting much. I've been just trying to scrape the data. But let's go to my fave, Tesla, even though I'm fighting with its boss. Okay. So yeah, like look at this stuff. This is real indicators that can help you make price decisions. And just imagine, these LLMs, when they really get talking to each other, which I think is going to be a big deal, and when they have some sense of experience, meaning they can remember more than just, they work the same as my software works now, where it's always just the real time, top of the heap, top of the pile, pop the stack. I don't know. Like, I don't know what any of that even means, but like, it's the most realist time thing. There's Tesla autopilot isn't considering what it's displaying on the screen. That's an animation. It's considering the next 50 feet of road. That's all it's ever considering. And then it like dumps everything else into like some data bank and shoots it off to the Tesla factory to see what's, help the algorithm improve, I guess. Probably if they're smart, they're doing it by, some kind of user interaction or whatever as needed automatically. But so look at this, clear top, boom, 265 market, clear top. And look at this green bar. I haven't looked at any of this data. It's been a minute since I saw Tesla. And so I love this stuff. I love seeing this stuff. I would have loved to see this like live. when you get these giant green bars, whoa. Honestly, I love the sell side as well. I love a lot of volume when there's like a ton of action. And it's getting cool because now I got all these systems. So I'm tapped into the order flow from multiple locations, which is giving me a live boom, 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 boom of information, a live feed of information. So more than price, I compute and calculate my own Greeks, which right now is pretty accurate. It's not super accurate. I can show you. There's work to be done, no doubt, but like it's not the easiest. I mean, my other Greeks are totally off. This function's called show off my delta. I like to show it off. What's so wrong with that? I built it to show it off. Like, I like it. What's the problem? I think that you basically have to calculate your own Greeks though, because, and you have to do it reliably in part for two reasons. Like one, it doesn't actually matter what the value is as long as it's within like, you know, some nominal range. Like the absolute value is meaningless, right? Like if it's plus or minus 10% of what another delta value is, that's a meaningless difference. The only thing that matters, literally the only thing, is does the delta track properly as compared to its own history? So can you compare it to itself? Are you comparing apples to apples? Like you can, and so like the problem with using somebody else's delta is reliability. Unless somebody knows that there's like a really like perfect source where you can like get a WebSocket connection to a live stream of the delta that changes trade by trade by the underlying price and all the IV that's computed and every other part of the model that needs to be determined in order to come up with these values, all of which interact with each other. Option pricing is very interesting. It's not crazy complex, but basically all the factors like have an effect on each other as far as I understand it. But anyway, like suppose you use somebody else's Greeks and then their server goes down. Well, like you're FUD. Like you need to be able to always calculate your gamma delta theta, I think, in order to do an effective hedge. And it's not enough to just do get delta, although that's my current obsession. It's not even working. Like all of this stuff I talk about is going to take years to build, obviously, like otherwise it would exist. One of the reasons I'm excited to try to build it is because one of my theories is that I don't think the opportunity to do the things I'm doing now have been available to people publicly for more than, I would say, 10 years, but I think it's actually closer to like 5 years. And so like there's an edge, and the whole edge is timing and getting everything computed and building a system. And so that all makes a ton of sense to me. And a big part of that timing, you know, like a little story about trying to compute my own delta. Like this stuff just makes such a big difference. And I just know there's so far to go before I get like the model complete or whatever. But one of the things that was really throwing it off was the hours, and I believe leap years, but for sure hours. I think it actually was just hours. The 16-hour trading session, if I remember, that was the number. And I wasn't accounting for that on like a leap year or something. And it completely threw off my delta. So that's how sensitive these numbers are. And right now, like my gamma and theta is like not that accurate, but I was going to show off my delta. Let's do it. Okay. So this will show off the percentage difference, and that'll be interesting. So percentage 2%, 7% is very acceptable to me. No percent. Look at that. That's reliable delta. That's as reliable as it gets. Come on. We have two separate models running completely independent of each other. They're both reading from like, they might even have a different price than me. It could never be 0% difference. That's not really possible. This is the lowest percent difference it probably could ever be. Because they're going to have a different price. They're going to have a different interest rate, free risk rate. And all that stuff really does contribute to how these numbers are calculated. But what I can tell you is that they are very, what can I tell you about them? Sensitive. And so that's why I like Delta. They're properly sensitive. So when the market goes down, my delta that's computed through a WebSocket connection on the price is the first to know. Have I been able to leverage that? No, I just built it. And it's not even integrated into any of my systems. But I know that that is valuable. And so it's going to be interesting to see what kind of tooling I can build on that. Because right now my Delta Hedge program, which barely works, but it works. I shouldn't say that. I should knock it down a peg. Like, it works. It could just be 1 billion times better. And so, but it does what it's supposed to do. It does what it's been coded to do for sure. So what about it? Yeah, like from here, I can, in theory, on every quote, be doing a hedge cycle run. So really then, right now I'm doing these hedge cycles by poles, and I'm basically just, however long it takes for the cycle to complete, then I run the next pole or whatever. And so it's like, it runs as fast as it can work. But it has to pull in all this external data. And I can only use contracts that have the delta available. Not all the contracts in the APIs that I'm using, Polygon, have the Greeks available. I always have the Greeks available for every contract. And with this level of accuracy, that is awesome. Like, let's see if we can get a couple more. Let's do, like, what do we have in here? Netflix, and let's go Arc, and who else? Let's go Unity and see what that, well, we have another one here. Let's go, what would be a well-traded name? Exome, which I saw. Like, and another thing I love about my program today, like, it's buying shit I would never buy. I would never buy gold. I mean, I would buy gold, but to have the gold, like, I don't want to just own a gold stock. I want the actual gold, the physical gold, you know, like, what good is the stock? To me, the whole point of gold is it's hard to liquidate. Like, the good thing about a house, the good thing about gold, like, those are hard to liquidate. There's no point in holding a stock of gold. Like, anyway, I guess people do it, but I would never do it, but this guy bought a bunch of it today. If you look, let's see what he bought. I saw him trading it, gold, GLD. So he bought, and then let's see how much it was. $1,500 of gold. Jeez, dude. Like, why? Let's see how much Exome. 1,600. Interesting. So, like, the thing I love about this bot is it's only the second day it's been running, but I do love that it would buy things I would never buy. And then that's cool because if I don't like them, I can sell them if they have a profit. And if not, they're probably adding a good amount of diversity to my portfolio. Like, I'm not ever going to buy Exome because I don't care about oil as much as I care about electricity. Although I agree, it'll be a part of our world for a good long time in terms of farming. And I don't know, there's always to me going to be a use for a nice use for an explosion. And that's different, right? Like, here's what oil will be. Oil will kickstart a fucking process that electricity can keep going. That's why you need oil. And as many liquid plants and dinosaurs that we got, we should probably drink them up, just like in There will be blood, you know. We should probably harvest what this world has given us and find a way to make it clean. Like, why can't you just scrub it, take all that carbon, compress it into a diamond, sell it for profit, you know, compete with those mines, which I believe are run by slaves. Maybe not. I don't know. Oh, you can't say that. The people that get fucked over by masters. How about that? Hey, this is a great example. Well, probably not, because the ticker just doesn't exist. Okay. So I do have to hack. Oh, you can't see it. I do have to hack a little bit on my models right now, because the only things I really need, the only thing I need right now is a reliable delta, which I have, at least to me. And then what I need, sometimes just to address the fact that all of these 4 are forward, that's kind of to be expected. You can't just change them like that willy-nilly, but you kind of can as well. And so I bet, like, for example, on this one, I bet if I add some zeros here, 23, 12, 15. So let's add like that. I bet that actually makes that one available. Actually, we'll get rid of these and just have the unity. Let's see if that does it. No. 45. Okay, let's try moving this over too. See if that gives it to us. Oh, we want to know why? It's because of this. No, that isn't why. Anyway, you can compose options like that, but that's not working for me right now. Point is, I can, to me, this is well within the range of acceptability. Like 20%, I'd be concerned. Anything above 10, I'd be concerned. I want it to be under 10% absolute difference, but it doesn't matter what the number is. It just matters how it changes. That's the only thing that matters. Now, maybe mine changes wrong, but so far, every time I check, it's spot on. To me, that's spot fucking on. And so, yeah, I'm using all this stuff in order to write the software, and it has 2 sides, which represent the market. It has the buy side, which is my auto trader, has a sell side, which is my Delta Hedge program. And both of them kind of do all the work for me, which allows me to take on a bunch of risk. What I'd like to is the theory of what we're trying to do on this show. And then I thought it'd be fun if I'm actually able to do this shit. Why don't I try to live stream it? Because it sounds crazy, right? And the only reason I think it's not crazy is I just don't think anyone ever tried before. I think that's the only reason it's not crazy. And so with that, I'm going to get a drink of water. 1 second. All right, we're back. So just had to get some gum. Yeah, I just think we're real lucky to live on this planet and be alive at this time, even though the markets are hard and she can be cruel and losses can hurt. And I've experienced all of the pain that anyone could ever imagine. But through all of it, I continue to be interested in what's happening. And so I think that means it's pretty durable. but yeah, like I just, you want to know why I'm interested? Look at this. This is awesome. So first of all, you see this dip in the Bollinger Band where it falls off a probability cliff. And then this green bar is like, probably not. Boom. And he's like, just shoots up all this freaking volume, this call action. And we can see that in the order flow. What time is it? 12:30. Let's go to the order flow. I believe that should be 2:30 here on Tessie. Oh, what? I was like, with the E's throwing me off. Okay, so that should be about 2:30 is when we see. So first of all, look at this. This looks like that accounts for that blue dip. And then right around here, we see some calls. Whoa, there's a blue dip. Damn, that's a lot of put volume. Okay, so that is why my returns are so high today. That's why. So if we go back to, because yesterday's P&L was not that high. That was like more what I would expect from like a day. It was, so let's just get actually, what are all these logs? Let's turn this off, and we'll need to show off my Delta right now. We'll do it again later for sure. You better believe that. So anyway, yeah. So wait, this is today. And then, whoops, what did I leave on? This. Go away. So this is today, and yesterday was the first day I ever tried the system. But still, yeah, that's more what I would expect. You want to know what's crazy though? Is if you actually look at the dollar for dollar gain to loss, that's pretty extreme in terms of absolute. Let's calculate that. Total loss. So we need to know, what are we trying to figure out? Like, what is the multiplier or the ratio? Oh, that's not type. And so then here we would say if it's no, it would just, we would use an absolute value there. So total net, total loss. Wait, to get the full ratio, can I average it as it goes, or do I have to do it at the end? I think I have to do it at the end. Right? Like I just need to take the total gain divided by the total loss. Am I doing that here? Anyway, let's just see what happens if we try to average it. So there is a right answer to it. Like my math brain isn't working right now, so I can't think of it. But I do know we want, well, where am I getting total gain? That's what I need. Okay, so I am putting this in the wrong place because I don't have total gain anywhere. Round of precision. Where the fuck do I get total gain? Total gain. Round of precision. Gain totals. Where's that coming from? Okay, so I am reducing this. Okay, so that's where I need to do this in that reduction. Total gains. So this is by symbol. Even this, I still have to reduce again, I think. But it would just be taking this and saying, like, I know, PL equals total profit loss. So then we got those guys, and we can say, what are we trying to figure out? So I just need to know the multiplier. What would you call that? Like, how many dollars of gain were there to how many dollars of loss? Total with ratio. This should just be this. And then we can just say total profit loss dot map PL item and we'll just return it basically exactly as it is. Come on. But we want to add the ratio is going to be the total. What did we say? Is it total gain? Oh, turn this off. Now gain sorted now. Well, wait, where did our actual total gain come from? Here. Yeah, total profit loss, total gain. Let's just say that for 0 to get rid of the thing. So this is equals, what is it complaining about? So that's just like coming from this actual variable name. That's not set anywhere. But I do like having that this way because then it makes it kind of like more consistent. I don't know. It's just how I want to do it. So I'm going to do it that way. And so from here, profit and loss, what? Spread can only be created from object type. I'm pretty sure it is an object. Is it not? Well, wait. Total. Well, that okay. So that is for the entire portfolio. Well, that's not really what I want. I want it per stock. Yeah, I want it per stock. So I do think I need to go back and reduce my own thing. Ugh, I have to go reduce it. All right, I'm too lazy and I can't think right now, and I'm sure that's not that interesting. But we could just get the ratio here for the whole portfolio. So that would be the total gain divided by total loss, and we'll just run that as well. Round to precision. There you go. Thanks for the autocomplete. So let's see what it is on. I think I commented out that. So it is by symbol list, object.values. And then we add the symbol here. But we don't have an aggregator. It's not aggregated. Now I'm thinking I actually do. No, I definitely have to do it again. Okay, so wait, it didn't do it. Let's go back. Trades, this, go. Boom. Total profit and loss. Did I stop logging it? Yeah, I don't think I need these. I think I just stopped logging it. Let's see. The whole point of coding is not to have to think too hard. That's kind of the whole point. And then that is why I did it as this, because I wasn't actually doing what I need to do per position. I need to see the ratio per position. I think that's going to tell me a lot. But it's still interesting to see this. Well, abs it. Well, I guess we'll just do that here. Okay, so doesn't that seem crazy? Okay, so what was yesterday? 8x? Like, that's freaking crazy. Ratio. Let's see. Is that right? Is that right? 254 divided by 63 equals 4. Like basically exactly. That's crazy. But then today, like imagine if that ratio held steady for even at 4 would be nuts. 8 isn't really possible. That means for every, well, it's hard to know. So then what I need to know is my risk. It's actually pretty hard. It's not super easy. I hold Robinhood responsible in some ways for not providing their customers with any tools to help them understand the risk, but it is also not like super easy. In some ways it is. And it can definitely all be automated through an AI. I mean, not an AI, like you could just have an engineer write a feature. So anyway, it is not super easy to understand your risk, but you could figure it out. And that would be a good thing to know, is like, what is your average gain profit to loss ratio per unit of risk? I think I want to know something like that, but I'm still a bit of a ways off from it. But that's crazy. I mean, the math checks out, right? 1788 divided by 212, 8. And so the reason it did that, though, is because, how did we get here to begin with? Because of this. No. Because of this. Yeah. Is because look at all of these puts. So yesterday, the system bought a ton of Tesla, like 100 shares, I think over 100. And then today, all of these puts came in. Broom, broom, broom. Look at all that. Look at all those puts. And on all those puts, it was by the size. So like if there's a giant put, like I don't see a ton of them, but boom, this 1.2 million. Let's look at the time. Tesla Q should have got some action around 11:42. So, or we can just look at the bigger quantities. They don't have the time listed anyway. So 17, I mean, that's a big one. There's a few of those. Interesting. So anyway, like, what is it doing when it does that, though? It's selling. Oh shit, you can't see Tesla Q. So when it's making kind of like bigger size trades, that's definitely driven by the premium. Now it needs to be driven by like a lot of other indicators, but right now it is driven by the premium. And so even so, like, what's it doing? So it's, for whatever reason, people are doing it. They started doing some high volume selling on Tesla. And so it immediately started booking gains and then adding it to an inverse position that can only gain where dollar for dollar, that dollar doesn't just get protected, it can only increase in value. Now, maybe the institutions are wrong and they're betting against what's actually happening in the broader market. In that case, yes, that is a waste or whatever of however much you get churn. What is it? A couple $100 or whatever, like, what is it? It's got to be less than 0.1% of anything. It's got to be less than 0.1% in one churn event. Now, I'm not saying they can't add up, but the whole point is eventually the market is going to find its direction. And then that is where the system is going to deploy. And what if the direction is down? Again, the whole point of this is basically stay hands off, at least for the first month or so. I want to get a couple of these wallets going where they're 100% automated. And because I want to see I have a suspicion that the bot will make better decisions than I will. And so I want to see what's possible in a fully automated system. That's just what I think. But but I always want to trade and be a market participant. I just want there to be at least a couple of places where I have a really pristine, long-term, hands-off performance on a couple of paper wallets or whatever. So, yeah, that is something. So anyway, like I was saying, what does it do if Tesla is in a long-term downtrend? It's going to completely sell out eventually of Tesla, probably majority at a profit, because as soon as there's high volume selling, it's going to do it at the same magnitude. Like I think it sold out of Apple. Apple. No, it sold out of Apple D. Wow, it put it all into Apple. This was like 50-50 a little bit earlier. Who was it? Who did it sell out? Nvidia maybe? Okay, boom. No, what? It all went all back into Nvidia? Oh wait, that's a call. Okay, this one is sold out. Yeah, this one. This call shouldn't be here. Ignore that. This one is so it is majority short. It's majority short. And I like that. I like that a lot. And so we should see something like that reflected in the sentiment on Nvidia then. Let's see. Pretty bullish, actually. Pretty bullish. Okay, but it was reacting to this. This is what it was reacting to. And I probably didn't have a ton of equity in Nvidia to begin with because it hasn't been buying that long. It's been 2 days. So anyway, the theory of it is, I don't know, but I also think nobody knows what the price is going to be. What I do know is that the smartest money is going to react the fastest. And if there's like a global event that is going to threaten things or whatever, whatever it is, like I want to react in real time with those guys. And I have a lot of ideas on how it can be done, which are not even remotely close to where I am now. So the fact that it can actually, not have just like a 50-50 outcome, which is kind of what I was expecting. I thought that my initial, and I still, it's been 2 like data points is nothing. Like 20 data points depends on the data, but like it's anyway, 5 would be nice. 25 would be nice. That'd be a good amount of data points. And so anyway, like as the market is going to do whatever it's going to do, this system should be able to lean into that in as real a time as possible. So the second the institution hits buy or sell, they have to place that trade in the market. It's going to get executed. It's going to show up in the order flow. And like, we're going to get these systems continuously distilling that. And how many people are just copying the institutional trades, which have signatures? They have signatures, like they buy at the money. They have different signatures than retailers. And I think that's like pretty valuable. And so all that can be improved over time, right? And then you can like even bring in other indicators of the technicals and the sentiment of like as gathered from news articles and that kind of stuff. And I'm sure there's APIs for that. So if there aren't, there should be. So that's what's pretty exciting, is it's just going to do whatever the market does. And the theory is it's going to beat everyone else on time. So like everyone that should have got out of the money or whatever, out of the stock, like they're going to do it 5 minutes after the trader bot did it. In theory. If there's any edge, it's going to be in that. That's the only edge I can really think of. But what's cool is I think there's another edge on this arbitrage possibility between volatility and time. And that can be done through these expiring options. And I do think like the order flow is a guide there or whatever, but really the key is just you need a system that is hedging every part of the option, because they all introduce different risk. So it needs to hedge volatility, it needs to hedge time, and it needs to hedge price. And those are represented in delta, theta, gamma. and properly hedged, I believe you can react way faster than the market, because if you're computing your own Greeks in real time, the only input you need is the price of the underlying. That's the only input you need. And then you back model the implied volatility by matching the actual price that you're getting through which you're modeling yourself anyway, which is funny. So it's a closed loop, because the price is going to get is already modeled on the weighted bid-ask spread. But I do think there's a way to also provide a futures model, so that when I query the registry, I can say, give me the current price as is modeled, which is just going to be like the midpoint of the bid-ask spread, because the price is impossible to know, but you do need a number. And so then I could get like a futures, like price for stocks and options. And that would be just taking into consideration the recent technicals and season. And not really, it would have to be minute by minute. The futures price would just, what would be cool is if you could pass in an interval. That'd be cool. And then I think that could be used to make trade decisions. I don't know. Should be possible to build, but I don't know how useful that particular one would be. So anyway, this is probably that's a lot of premium. So if we see these calls into close, then in theory, the last trades on NVIDIA were bullish. I don't care. I just want to see myself. NVIDIA. Buy. Yeah, nice. So yeah, continuously adding signals to the trade bot, I think, is going to be the next step. And I should be able to add those individually so that I can understand their performance separately. And I can probably do that back to the code through their timing. Maybe I can connect their timing somehow. I don't know where that code was. Let's go back to this intro. We can wrap up here. So yeah, thank you guys for joining me. And next time I'll just keep giving updates on how this auto trader works. I think that today's ratio was probably an anomaly because it had bought Tesla on the run up yesterday. I don't know. We'll see. The reason that there was a absolute gain is because it was selling a bunch of a stock that it had just happened to buy. Now, maybe that's a feature of the system. I don't know. Or maybe that's just chance. I don't know. It's 2 days. But what's cool about this is it is the ultimate, not even. It's just the first step. But I could not take this step. I could have taken it had I worked harder and been more disciplined. But because I am who I am, I couldn't take this step until maybe about a week ago. And that's where I got all the connections wired up. A lot of coding is just wiring things up. Like I'm talking about it. It's farming, it's laying pipe, it's chopping wood. A lot of coding is chopping wood, a lot of it. Now, the part that isn't is what I think kind of sets people apart. And that's what's so cool about AI is whatever you're doing. Are you writing a program or a book or a opera or what do people write? I don't know. But whatever thing you're doing, it doesn't have anything to do with writing. It's just really good at writing. But it's good at talking and it's good at a lot of things. It's good at ideating. And I don't know why I'm having trouble thinking of all of its features right now, but I have found AI to be incredibly transformative in my own approach to basically anything that I can think to use it for. And so that's what I think is kind of special about our time. And maybe one of the things that makes me think all this crazy shit I just said is even possible is because we are in an unprecedented time. people, they're blowing each other up in Palestine and in Israel and Russia and Ukraine, and horrible things are happening everywhere from Mozambique to Detroit. And that's just how it is. Like, people are savage animals. We like to pretend we're so different than any other animal, but no. I mean, we did invent society, and we like to pretend we're civilized, and that is true, kind of. Well, people are playing by the rules. But people stop playing by the rules as soon as you let them, and they're always trying to break them, which is just how it is. Like, lock an animal in a cage, the first thing it's going to do is try to get out. And like, that's what's a little concerning with AI. And so whatever it is something new and useful, and they're just building it. So we're going to find out what other uses it has real soon. If it can read images and if it can type words, like, you're getting really close to Jarvis with that. You're getting really close. And if everyone had a personal Jarvis, they would be like, that's like half of what made Iron Man was he was never blocked, right? He always had all of these ways to get unblocked or whatever. I don't know if that's true. Maybe Jarvis wasn't actually that featured in the films. Can't remember. But the idea that everyone is going to be able to have a LLM in their brain that knows more than any human ever could and has a verified truth quality score associated with anything that it provides, but also is just whatever. I can't even imagine. We're going to build so much stuff on that platform, and it's going to get better and better and better. And so that is what I'm excited about, is to participate in that world and to just see what I can do with AI. I just want to see what I can do with it. So right now, it's helping me build this auto trader and Delta Hedge programs. And it's created kind of like an architecture and used concepts that I didn't even know existed. And in that alone, I think is going to be pretty, is going to continue. I think that's going to continue, and that'll be like really valuable. So I hope to share all that stuff with you guys, but like, we're just trying to see what's possible here. So if I find something that's really unique, I think it'll be hilarious that I will have live streamed it, because that's kind of crazy. And how could it be? But I also kind of do expect to find something a little bit. And so we'll see, right? We'll see. I'll let you guys know. Maybe I'll do a show tomorrow, if not later, and we'll keep track of this ratio, and we'll see how, and the day's P&Ls. And what's so cool about this is it's coming straight from Tradier. So they calculate that, I'm hoping that they account for their own fees and FINRA fees and all that. I don't know. And so I'll have to figure that out and factor in those costs myself. Or if it's at an 8x ratio, I won't have to think about it. So, all right, thanks. See you guys.